Our top story as we enter into this critical week is that Josh Brown has trimmed Alphabet. I know you remain long. You did tell us last week you were most worried about this name of the ones who were reporting this week. Why'd you trim it?
Well, for exactly the reasons I said. Look, this is profit taking. I'm in this stock for a long time. I have a big gain here. And what I wanted to do was basically take a percentage off the table ahead of what's expected to be the slowest revenue growth quarter this company has had in quite some time, maybe ever, actually. So they're expected to grow revenue 12% year over year. And that's been in decline for 4 straight quarters, which explains why the stock's valuation has compressed, which we'll talk about in a minute. But there are some really big competitive questions here. You've got companies like Perplexity that didn't exist 18 months ago that are now taking meaningful amounts of search queries. You've got OpenAI, and Google is expected to fall below 50% of the overall search market share next year for the first time since coming public. It's still the dominant player in search, but I don't remember a time where it's been this under siege. And a year ago, I think they could have done something about it. They're just moving too slowly. And so now they've integrated Gemini AI search results and this kind of AI summary at the top of the page. And I know they're working on the monetization strategy there. And maybe they'll have something positive to say. But I just think they're plodding along while these other companies are literally raising billions of dollars. The reason these other companies are able to sit across the table pre-earnings and raise billions of dollars from VCs is because there is this overwhelming sense out there that for the first time ever, Google is somewhat in a position where they could be disrupted. So
vulnerable.
You add that to the fact that you've got. Go ahead.
No, I was going to say you're suggesting they're vulnerable for the first time. Let me just move the ball for
potentially.
Yeah. Because what's interesting to me is, Weiss, you actually think the setup's good.
Yep.
If you look at performance over the last 3 months, Alphabet is the underperformer, and maybe that's why you think the setup is actually good. It's down 0.5% over 3 months, while everything else is up in that space.
Yeah. So just for clarity here, I had taken a much larger position, down 150, and cut it back, whatever, a month and a half ago, maybe 2 months ago. For exact reasons Josh is saying, and not that he's wrong, is that that's what's known. So it's known it's going to be extremely slow quarter. It's known Perplexity and others are in search. It's known that maybe Microsoft gets back into meaningful search. They never left it, but not been a factor. That's all there. So where could the surprise come from? Surprise could come from that they're doing not as bad as others say. And by the way, I do think where Josh and I particularly disagree, not in the setup, but that they're not just sitting there. To think that Google is sitting there while others raise billions and are moving ahead of them is just misplaced. It's been a major initiative for them with AI. They are moving forward. I think it was overstated how bad their AI is, and that's the market's term, not mine. I actually think it's a pretty good product, and very few companies have the wherewithal, financial wherewithal, and the engineering talent. Engineers have gone from making $250,000 a year, right, to if you're working on AI, it's $5 million.
Yeah, it's all fine and good, but if they have the prospects of losing search market share and a piece of real estate within the advertising market, which was for all intents and purposes just a duopoly, right, between Alphabet and Meta, and now if you have the Perplexities coming into the game, you do have the chance of loss of market share, however large that may be. Right. The reason why you're willing to pay whatever you're willing to pay for the stock is because you don't think that duopoly is ever going away.
Well, you're paying below a market multiple for what's not going to be bad growth. I'm not saying they will. I do worry about them losing share with AI. That's the great equalizer, right? But it also costs a fortune to build those AI products, number one. Number two, Perplexity is being sued right now for taking data. But forget about all that.
Perplexity isn't. They're not building the models, right? They're a wrapper so to speak. They're not building what OpenAI is building.
No, but they are building the data set. But here's what I'd say, going back to where you started the question. I think for this quarter, long-term issues exist, but I think for this quarter, the setup on Google is better than not.
Okay. Deirdre Bose is here with us at Post 9. It's good to see you, and it's great to have you ahead of what is a pivotal week as you watch this company. The most important thing they have to deliver on is what, in your mind?
Steve and Josh nailed it. It's the core. They cannot show any weakness there because, to both of your guys' points, even though you're on different sides of it, this is the only thing that matters, how vulnerable they are. So if their core business of advertising shows any kind of weakness, I think that investors are going to get really jittery, and they're going to think that dominance is being eroded. You mentioned a number of other products. This morning, there was a report in the information that Facebook is now working on a search engine. And I think what generative AI did was light a fire under all of the mega caps and say that they have to ship products quickly because, upstarts like OpenAI and Anthropic, they're not waiting to perfect it. They're shipping it and they're trying to get scale. And I think we've seen Google move faster than I've ever seen them. The question is that fast enough? And are they willing to disrupt their current model? They add advertising to AI overviews below the fold. Like, that is really important for merchants and advertisers. You're no longer one of those 10 blue links. You're a little bit further down. On the other hand, Google has AI for the masses, right? I mean, I personally use a lot of ChatGPT. I don't love Gemini, but the way that the mainstream is going to interact with AI is through Google. So maybe they just don't have to mess that up, and they have to give people
I don't know if that's so true.
As useful.
Go ahead.
So this is the issue. Deirdre is right. Google has been the mainstream way that people interact with Web 2.0 really since the beginning. I don't know if that will remain true, and that's why I trim my position. I think Google at 21 forward earnings is correctly discounting all of these competitive threats and these issues, but that might not be cheap enough for the rest of the street, and that's my concern. You have to keep in mind that today,
get their AI, Josh? I'm talking. People aren't going to go. The average person, your mom, your aunt, is not going to go sign up for and pay for a GPT subscription for $20 a month. They're going to kind of stumble on it.
You're right.
Google, maybe a Meta.
No, it's Apple. Listen, this is what I'm trying to say. Today, Apple just released its Apple Intelligence. So you have to go into settings if you have the 15 or 16, and you have to tell it you want it. It downloads this gigantic file, and it's not all the features yet. But the future, if it involves less time staring at a screen, is going to involve more conversational versions of search. Google just lost an antitrust case over the summer. They paid $22 billion to Apple last year to be the default search engine on iOS devices. There's an open question if they'll keep that. Now you have all these other fronts they're fighting on. They're going to report YouTube advertising at the slowest growth rate in years, and that's in a best case scenario this week. They're competing with Amazon's third-party ad platform, which went from 0 to number 3 in 2 years. And they're now competing with Netflix ad-supported on the YouTube platform. So they're fighting on that front as well. The best thing happening at Google is cloud sales should be close to 30% year-over-year growth. All of the rest of their businesses are growing low teens percentages, looking like they might even go to single-digit growth rates. And as a result, you've got a discount in Google's valuation relative to the rest of the group. As a long, I'm saying I want less risk here. I hope Weiss is right and the company is able to surprise to the upside. I'll be fine. I just don't want to be as heavy as I was yesterday.